Good morning. This is Larry McMillan with the stock market update on Monday, February 6th. So the market broke out last week to the upside, broke out over the 4,100 area. That had been triple resistance, so that's a very strong technical picture when it breaks out like that. And we had buy signals in the last couple of weeks for most of our indicators, internal indicators. So that was also bullish as well. So you'd think the market would be flying to the moon right now, but no, it's in its rather contrary form, pulling back, and now it's appearing to test that 4,100 level this morning. We'll see if that holds. If it doesn't hold, if we fall back below 4,100, that raises a possibility of a false breakout on the upside, which usually is not a good thing, and probably we'd sell off another couple hundred points after that, maybe even more. In addition, while all our technical indicators, our internal indicators are still bullish, we are beginning to see a setup for one of the first sell signals. This is what we call the classic modified Bollinger Band sell signal. We don't trade those because they have a rather back and forth reputation. But if it is confirmed one step further, that becomes a full-blown McMillan volatility band sell signal. So we'll keep you posted on that. Neither one has occurred yet, but if we close below 41.38 today, which is certainly a possibility, that classic sell signal will be in effect. Everything else, though, is pretty bullish. The equity-only put-call ratios continue to decline. Breadth has been very strong. Even though breadth was negative on Friday when the market sold off some, it's still in a very strong position, and we probably could withstand another couple of days of selling and still remain on buy signals from the breadth oscillators. New highs continue on the New York Stock Exchange. New highs continue to be very strong. Reached over 200 one day last week, and so it's been over 100 for most of the other days. Again, that's a buy signal. VIX has not risen, even though on Friday, in fact, when the market was down, VIX was also down, although on Fridays, VIX has been getting hammered lately. But VIX is still in a downtrend, so that's bullish for stocks as well. The warning signs would be if VIX were to jump by more than 3 points from any closing basis, and also if VIX were to trade above its 200-day moving average, which is about 25.5. But neither of those things seems to be in danger of happening either. The term structure of the VIX futures and the CBOE volatility indices was taken together. We call the construct of volatility derivatives. That remains bullish for stocks as well. The CPI report is due out on February 14th, so that could raise option premiums around that level or just after that date. But for now, that indicator remains bullish too. So overall, we are no longer holding a core bearish position as long as SPX is above 4,100. And we are trading confirmed signals as they occur. So recently, those have all been buy signals. But now it's potential, there is a potential for a sell signal to occur in the relatively short term. In any case, I invite you to visit our website and take a look at, we have a new area on our website, a landing page celebrating the 50th anniversary of the CBOE, which is occurring this year. So we'll be running a series of articles and interviews with people who were around at the beginning of the option trading. And then, meanwhile, just take a look at other things on our site, including our newsletters, where we keep up to date on all these indicators daily. Meanwhile, have a great week trading.